Hello, welcome to a strategy review. Today we're going to go over the S&P, kind of a continuation from September 9th event. We're going to take a look at the 12th and also coming into the 13th. And on the 12th the market was in a neutral digestion and sentiment bias was above the market. So whenever we have that neutral digestion market state with sentiment above the market, it's identifying where the real selling interest is, because this is negative sentiment below this price, so this is the real negative sentiment interest. And then here's our downside pivot at 2106.75, and this is our kind of the low point of this digestive range. And so the R level or sentiment bias is really just extending this digestive range. It's just widening that range. One thing I want to note here as well is on the market color analysis, the dynamic channels are yellow, and that's a signal that the market's at an extreme. So anytime that the dynamic channels get pushed to the extreme, it's a tell that the market's a little ahead of itself, and it'll have difficulty sustaining moves in the direction of the trend. Especially if we get an early morning follow through in the trend direction, it's particularly vulnerable to provide some good opportunity for a turn the other way. So it's basically telling us that the Friday event maybe overdid it a little bit and it's a little ahead of itself. So we want to be aware of early weakness for a potential reversal. So because we're in this state and we have this structure, we're going to, the optimal strategies are, one, we have a buy strategy, which is a buy DP reversal. So we're looking for the market to kind of press into this support area and then give us an exhaustive signal for a potential rally. The other optimal strategies are to fade momentum into the R level and then leverage that up on a failure back down through the upside pivot. And on a hedge strategy theme, if we do get this reversal strategy and the market comes up to the directional, this is going to be a big tell. If we hold the directional and reject, that could put us into a negative transition. And if we take it out, we're going to get a buy signal, a buy DIR breakout, which is going to target the R level and set up these sell opportunities. So coming into the start of the European session, here's Friday's event. We had our extreme as our coming into play, markets attaining that on Sunday evening, and now we're trading below the downside pivot, so we're trading here, and this is a condition for a reversal signal. So on a reversal, we want the market to take out our figure and then come back above it. That's our trigger. And so we can use our metrics where we can look at the alert distance, and we see the market fail below the alert distance, kind of get back above it, and that gives us a good trigger. You could use the variance to get more aggressive and use the variance on the opposite end as well. It depends on the market conditions, and you can also take a look at what's happening in the order book. The key thing is you're having an exhaustive event, and you may even have an exhaustive event in front of the figure, but that's the real tell for a reversal. A fade, you're fading momentum. A reversal, you want that exhaustive signal. So here I've added in the CRX minus. This is a great level as well. CRX minus is part of the critical range. It's the extreme, and it's a good extreme for a DP failure. I also like to use it when there's a playbook strategy that's a reversal, because if this area is holding, it kind of gives you an opportunity to anticipate that reversal, and you can define your risk off the CRX minus. So the market comes through here, you're looking for that alert, you get the alert. Is it going to transition back positive? Well, if we get some stabilization off the CRX minus, you can kind of lean into that potential reversal trigger. So you start to put some a unit on, and then you can start to leverage that up as the market takes out the DP, and then really fully leverage that thing if it goes and transitions through the directional. So here's our fully price qualified reversal signal. We start out the session above the alert distance. We come here and we price qualify below it. We get some stabilization off the CRX minus, which is nice. So this gives us, we can really kind of define our risk here if we wanted to start to anticipate a reversal, because that's what we're looking at. Had a big, huge sell-off event, having a little bounce makes sense, especially when sentiment's so far above the market. It's kind of like a gravitational pull. What if we do stabilize here, we could see a move to the top of the neutral digestive range back up to the R level. So this is classic reversal. We have our averages, which worked really well on the sell side, and now we're breaking that structure here. So this is also a good trigger point. You have this consolidation, get a trigger here, anticipating a reversal. Market price qualifies back up above the downside pivot, and we get a pullback to the top of the alert distance. And this is really all you're anticipating for the best reversals. They should just go. They're not going to let anybody in. And so if they are going to pull back, you're anticipating them to bottom out at the top end of this metric. The alert distance, absolutely. Here we had a press of the alert distance, came back down, touched the variance, and then they went. And that's the expectation. The price map is like a ladder. You're climbing the ladder, and that's the expectation on a trend move. We get the reversal shift, and now we're expecting the market to trend and work higher, move lows, and also climb the ladder. So as it breaches the CR minus here, this is another positive signal and a good add-on situation. So you get the price qualifier, and you're looking to add to your position off the CR minus, and you can use this metric, and we have a little price structure here that we can identify and say, okay, what do I want to risk? I can put my stops here below that price structure. What am I anticipating? I'm anticipating at least a half segment move to the directional, but we are part of this theme. And where can this theme go? This theme can transition, and so being aware of that. So even if it's just a small gain, taking it off the table, or are you going for participating in the bigger move? And one thing you can do is just continue to watch the price structure. Is it holding price structure? If it is, then we're part of this trend, and that's our expectation. So as the market's coming into the directional, we're not sure if this hedge thing is going to pick up. So we need to look for tells, and the tells are just structure, just simple price action. Is it holding higher lows? And then at this point here, when the market it keeps you in real aggressive, and then we price qualify through the alert distance of the directional. This is a positive signal. So this is negating this, and we're putting us in it's triggering this buy breakout situation. So we're getting a buy breakout. Also, what you should note is that you've had this steep run. You've generated a buy signal. It's expecting the market to pull back a little bit is normal. Where's our price structure low points? Here. So that that's really our risk for this buy breakout signal. We're anticipating a little bit of a pullback, so if we're getting in here, then our risk is here. Get a little squeeze there. Then we price qualify again, a new move high, and we're looking at these higher lows, and it gives us another buy signal here off the buy DIR breakout, and then we are just kind of watching these averages. And is the market's trending? It is. That's the fact. Where can it go? Well, if we have this breakout, it's going to target at least the upside pivot, but we're looking for potentially the R level. So the rally continues, and it's a real pretty picture, holding our averages, holding positive price structure, and then we get a surge up to the CRX plus. So first we pressed the lower CRX minus, and it's stabilized, and we got a bounce, and now we're in this transition optimal theme of a buy DP reversal. We had the buy DR breakout, and we're topping out here at the moment at the CRX plus. That's a normal reaction for the market. For the thing to confirm that we're going higher, we're going to need the market to take out that CRX plus, and then that's going to be the trigger for a new extension higher. In addition, if we do get a rejection here, this market can pull back all the way to the CRX plus. This would be the structure break. So just as we're watching price action, we're going to watch how does the market climb the price map ladder. And so where's the first structure break? Here of the ladder. Where's the second structure break? Here. And so a failure here is going to negate this positive momentum. If it holds, then the momentum is still true. So here we have the market exhausting, and it breaks below the upside pivot, but it stabilizes off the CR minus here at 2130.75. This is a sell UP reversal signal. Typically in these states, we're anticipating the market to make a play for the R level first before that sell comes into play. Sometimes the market won't make it up to the R level, and this sell signal will come into play. So you have two conflicting things. You have this positive momentum, the market's working positive momentum, and we're getting had a little exhaustion here. Sell UP reversals coming into play, but the market is held structure. So if you're accepting this signal, what you need to understand is that the market did not make a play for the R level yet. So as long as that R level is sitting there, it's going to be a draw. And if this market is going to reverse on the sell side, it's going to roll over, and the CR minus is going to be the confirmation point. So until it's taken out and we see this price structure here, we really get a break in market structure. This is a kind of a hot potato, and you shouldn't expect. You should keep your risk real tight, as it should really just roll over. And at this point, when we break this price structure here, this should be a pretty picture, and it should just start to cascade. And when it doesn't, it tells you that this is not ready to happen yet. It may happen later after we get a play for the R level, but it's not ready to happen yet. And the market is back into a positive situation. And at this point, it's confirming a new run, targeting the R level. So we don't get any pullback, and the market continues to scale higher aggressively, takes out the upside target 1, holds that structure, and then makes a play into the R level, setting up the sell R fade strategy. So we have the sell R fade, and the market is coming into that, right into our optimal sell area, which is the variance. So this is near the end of the session. So how much time do we have left? If you're going to be closing out your position, prior to the close, how much time do we really have left for this to play out? Maybe we have a little bit of time to get some money off the table, but more likely it's going to happen overnight. Could happen right after the markets reopen, and so you have to be prepared for that. If you're going to accept this risk, you want to make sure you're in it for the reward, and this is the optimal sell, and that which could potentially set up a transition all the way back down, at least back down to the directional area at 21 1/4 3/4. So we do get a rejection there, setting up the sell R fade, and it really just pulls back into the close to the lower part of the upside target 1 alert distance, which is about a half APMD of profit. To be continued in part 2 of this post. market is really just working the negative sentiment off the R level, but we're trading below the DP. Typically in a neutral digestive state it can be more choppy, so not pressing a breakout in this situation. How can we get some more clarity? One of the indicators I like to look at, the ADX tells us the market's got good trending ability. So in this case, taking all the information we have into account, we are in neutral digestion. We have had some decent trend moves, and we've got a purple ADX which is telling us that yes, we can trend. So we're going to respect the trend. So just to leave you with the with the expectations, if we're climbing the staircase down, this is the first structure break, second structure break. So this is the top, and you can see kind of our averages are kind of coming in there as well. So if we did get a positive bounce off the CRX minus, this is really your risk where you're wrong. Doesn't need to go up there. Absolutely, it can maintain a trade below the downside pivot, and if it does, that's more negative. And we can see we have some liquidity in the book here. We'll see how that holds up. If we get a push into that area, so if we are selling the market in this area, we can risk above our metrics here. So risk above the variance or risk above the alert distance. More likely than not, this thing's going to trend. It's going to top out here below these levels, and it's going to continue to cascade. If we do get a push back up into the CR minus, it's more of a signal that we might be, there might be some digestive action, more stop and go before the market really makes a decision. Is it going to roll over again, or are we done and we're going to move back into a neutral posture? So here are the results of the session. The market does roll over, and it does bounce back into a neutral digestion. So we had a little bit of both. But I want to point out a couple interesting tells. Here we're having a market that's transitioning through the directional. We're working our averages. We're working negative price structure. We have a failure coming down to the CRX minus. We pull back in. We hold the variance metric. We make a new move low, and we come back into that same zone, and we're making a lower high. So this is classic trend. We've got the ADX going in our favor. This thing is breaking out below the downside pivot. We're in a downside breakout. We're in the hedge strategy theme, and the market is starting to move lower. And then here we get a confirmation. We're breaking below the CRX minus, and things are really aggressive, and we attain our 1 APMD. It's always good to look back. What did we accomplish during the trade session? Well, we accomplished a 2-segment move. So we have, here's one segment. Let me just clean this up. This is one segment, 2 segments, so 2 APMDs. The market, 2 APMD move is a basically an objective day. And a lot of times that's all we get, and that's what we got. So anytime the market's attaining a 2 APMD objective, especially in a neutral market state, it's something to take note of. And here we have that lower low, high, lower low, and then we make a higher high here. Does a little damage. Market comes down, takes out the downside pivot. Let me put our metrics back on here, because this is important, that the market actually took out this lower alert distance. So it should really accelerate and keep this pretty picture, and this rally here should really should top out below the DT1 and continue lower, and absolutely it should top out below here. We can look at that price structure and say, oh, maybe they'll squeeze it up to here. Or even that would be the absolute high point of market structure. Let me put the minor levels back up here. But when they do this, this is a tell that this is over. We know the market's in a neutral digestive state, so we have that in kind of the characteristics of that state are more digestive. Those are some of the attributes, and so those can always come back and kick in, especially after breaking structure, and this is the tell that they're going to do that. And so when the market does something like this and it's breaking back down to new move lows, you don't want to get sucked into anticipating this to return. If this was going to go, it would just go. It wouldn't do this. When markets when they want to give it up, they just give it up. They don't let people get back in. and typically they do not do that, and so it's more likely it's going to stabilize, and you're going to be stuck with kind of a difficult trade, and that's what we got into the close of the session. So it's an event week. I'm going to roll right into the action on the 14th, and we can see we had the market really come off, and we had this big violent trading, and now in early trading coming into the European session, we have this market digesting, and it's stabilizing off the CR minus. And taking a look at the market state, we've got the S&P is again still in a neutral digestive state. Attributes are more digestive. We look at where's the sentiment bias. It's above the market again at the upside pivot, so that's giving us negative sentiment below here, so we're more of a sell rally bias. Another thing that's come into play again is we've got that yellow dynamic channel, so that the market yesterday was kind of pushed to an extreme. Our state conditions, our strategies are going to be the same, and we've got more of a negative bias, fading momentum into the upside pivot area. If the market presses the downside early, we might get a BDP reversal, and that could set up a sell opportunity against the directional for a trend, continue to kind of negative transition, or a break-in structure is going to give us a buy signal. So taking a look at the action, we didn't have that situation we had the other day, where the DC channel was yellow and we were down at the downside pivot. We're more in the middle, and that another way if a market's at an extreme, it can go sideways. So it's either going to give us a move in the direction. This momentum is going to continue and open up pressing. That's when you get the reversals, and if it doesn't do that, it typically foreshadows a sideways session. And as we're coming into the regular session, that's what we've had. And so it's a dangerous trade. We've got a market that's pushed to the extreme, and we could have some volatile swings. And where can those volatile swings happen? Well, they can happen within the CR minus and the CR plus. So we could see some big digestive swings here. But what do we also know as a fact? Fact is we're sellers of rallies. So this market has a negative bias. In addition, we still have a purple ADX. And we know that a purple ADX means the market has trending ability. So those are important facts. We know we have the dynamic channel that's yellow, and we have a purple ADX. So we know this is not giving us a reversal, it's giving us a digestive trade. But we know this thing has the potential to trend. And we know we had a big negative event that we're following. And really this is just telling us that we need to wait before that can resume, and because it wants to trend, and we want to potentially transition through this neutral zone, but we got a little ahead of ourselves. And so as time goes on, we really have had this digestion since yesterday, and now we're since the 13th, and we've been continuing to digest. So as we move farther and farther along this digestive path, all of a sudden the energy is going to start to build up for potentially this negative sentiment. We have sentiment bias above here, and if we're below the directional, that's kind of telling us we're pressing it, because the directional is our classic pivot point. We're below the directional, we're leaning negative. Where are we leaning negative towards? Wants to make a play for the downside pivot, and so that's what happens today, is where we have the market does follow through, and here it pays out a full APMD down to the downside pivot. And we get a little reaction off the DP back up for a half APMD move back up to the CR minus, and basically settling on support. But what's happened is the market is really it's digested enough, and now it's back on edge. And is it going to follow through, or are we going to reverse out of this area and bounce back into the neutral zone? And so that's what's on T for the 15th. So I'm going to update my grid. So the market's still in neutral. One thing that's a little different is structurally, we've got the sentiment bias above the market now, coming in at 2148. So it's kind of really shifted up. So basically telling us that this market can squeeze us all the way up to the R level, and it's still negative. So that's something to be aware of. And the downside pivot now is at 21.04 1/4, and we still have that same dynamic channel yellow, but we still have the trending ability. So it's kind of conflicting signals here. One saying we can trend, one says we're at the extreme. Markets can always get extended more. That's one thing to be careful of. You don't want to hang on one indicator and be all end all. You always want to practice good risk management, but it's always a matter of being aware of what's happening with price action within this structure in the context of those conditions and characteristics. And when we view it that way, we can pick up on the tells of the market of what it wants to do. And currently in the early session, we're weak. We're below the directional. Are we going to be able to start to trend and to move lower? We know we're a little extended, so maybe that if it does push lower, we're going to have more stop and go action. Absolutely, markets can go to extremes, and so you don't want to take a stand. The thing could actually absolutely give it up. But if we do get a buy reversal, that's going to be a positive signal, and then we have to think again, what if? If we do get a positive signal off this area, what could we do? Absolutely, we could make a play for the R level. It'd be a big move. And what's going to be the big area? This 21.18. The directional is really a key number right now, because if we look at the directional, it's really gauging sentiment. It really kind of shifted the sentiment down, because if we're below the directional, we're negative, and we're pressing support. We shift above there, it's kind of negating this weakness and saying, okay, we are back in neutral. We could have a rally. If we do have a rally and this thing starts to climb the ladder higher, it can climb back up to the upside pivot, or even climb even higher up to the R level. So it's a bit of a stretch. We're going to continue to follow the S&P. So any questions, please contact me at info@jsservices.com. Thanks.